This is Justin AMZN on March 23rd, 2018, Friday, and I've got the aftermarket and the pre-market up from today, and the price right down here looks like it's right on the line we got. Yep, we came down to a low of 1514 pre-market, and then bounced, and then we were right around the same area set to open as the close was yesterday, right on this line, 1541 in here, or 1540. And it was just pretty incredible to see that. It looked like it was going to roll over, keep going, just drop, and just bounce right off that line. We've had this line on here for a number of days or a couple weeks now. And so we're going to step into the day, see how this played out. Opening candle was a very large candle. From the low to the high was about $12 and engulfed most of this consolidation here, and a lot of selling obviously here. So it's still something that you could take a break down lower or take a breakout higher, but we've been looking bearish, so most likely lower. That's what we got in the next candle. And again, another large candle, didn't even pause, to slow down inside. You would have had to just been shorting at the pre-market high here, and getting out somewhere down here at a support or somewhere. Ideally support, because that's what we hit next on the next candle. It looks like, okay, we're just gonna go down a bit more, and that continued. Got a lot of buying here. We got into the 1517 area here, not quite down to 1514 again, but with this pre-market move pretty quick and then a very quick rollover, I thought, okay, there's a chance it could pause on the 1514 and reverse, or just pause there and then drop lower. And I think, so we started to bounce a little bit, came right back up to 1528, another price we've got in here. A smaller candle, this is like, I think the smallest so far in the day. Everything was just moving, everything was volatile, and these options, we'll get into in a little bit, were just horrible with the spread. And so if you have the capital to trade the shares on a day like this, that was the way to go. Or just set your price like up here, short up here, and just know what your risk is. And it's too wide for me. So I'm just clicking through some more of the candles. We came right back into the 1528. We had a wick here, and pretty large candles again. We had some high wave candles, looks like some indecision, and then looks like, okay, we're going to break down. But that line is right there still. And so you really would want to wait till you get below. Well, it kind of is right there at that low. And then what happens? It actually bounces there. And I think the lows here, 1527.21 and 1527.15. So 6 cents. 6 cents. That is, nearly a tweezer bottom. I mean, on a $1,500 stock like Amazon, we'll count that as a tweezer bottom. So we did bounce there, got back up into the 1540 price range here, and we're contending with the high at the open here, and then this looks like an evening star reversal at what's known as old resistance, or old support, new resistance, and we're just kind of sitting on it. So you could do an entry below the low here, 1536.43 and 1536.48. So 5 cents between these two lows this time. Still pretty wide range here, over $10 or about $10 on the price of the stock. And then we get a little bit of an inside, a little bit of consolidation, and then we get the break. So at this point, okay, we've retested. We opened pretty close to the open, or to the close of yesterday. Ran down, kind of had an ABC back up, and then a consolidation with an evening star reversal. We're breaking down again. We're rolling over. That's what's happening here. And we roll over. We got an indecision candle here still above our support. And so this would have been something that you want to tighten up your stop to this candle, or even here, thinking, okay, well, we're going to break through this and see what happens. And we did. We came right down and tagged 1528.02 right above the 1528 price, and then we touched it and actually went through. We consolidate right here on the line, and again, we got the support here in the day, but you got, just some consolidation over these candles, 15 minutes, that it's not moving too far compared to what it's been doing. And if it's going to bounce, it needs to do it here. Maybe you're still in this bearish move. Hopefully you are. You tighten up your stop right here, or something tight, and then maybe not too tight because that actually broke down. It looked like it was going to start to bounce, but you want to really get ahead or get above these bearish candles if you're going to go and bounce bullish, similar to how these candles, you've got you could have gotten in here above that wick, gone up maybe for an R, but here we continue. So we got a nice large candle, some higher volume. We had formed a squeeze in these candles, and we're rolling over with the bearish volume or bearish momentum. So you had a couple confirmations that we continue going lower, and then this one actually continued to just kind of chop around, and looked like it could just roll, and then finally does. So some more choppiness here. Looked like it wanted to rally. If you just held a stop at above here, or then tightened it up, not too tight to the price. The high on this candle is about 1526. This one, all these, if you had held a stop at 1526, plenty of that would have been too tight still, but I mean 1530 would have been a good price, or not 1530, 1527, 28 would have been a good place to have a stop, and then your target down here at 1514. And now this was interesting here. We consolidated right here, and it's like, oh wow, is it going to do the same thing again and break down bearish that we just did? It could do it. Some people were probably, okay, now we're confirmed. Now we're going bearish. Got in, and on this candle, I saw this go down to, I think it was about 1509. Yeah, a low of 1509. I'm like, wow, that just keeps on going. That's really fast. And I was thinking, like, that shouldn't have gone that fast. It should have, after this big pause, it's like this should have just rested a lot longer at this price. Like, that was a solid price from pre-market, from the previous days. And what happens when you're way down here, 1509? It just rallied, and I missed it. I should have been buying calls on this. I was looking at them. The spread was huge, but I should have just gotten into one. The 1525 even, because it's expiration Friday. This thing has been moving so bearish. This was not the place to load on bearish. You got to wait for a retest of anything, even back up to 1514, even back up to the lows in here, would have been around 1520. It would have been close enough to 1525. It would have made some money on that, from way down here. Or even 1520, out of the money. That's what I prefer on these, or a couple of strikes away from the money, that kind of thing. Had you been buying calls down here, buying shares down here, looking for it to retest, you would have made some dough. What happened is it actually rallied pretty quick and got up into, I thought it made it up a little higher. Let's go a couple more. Yeah, so it came up, looked like it was going to roll over, so this would have been the retest right in here at 15, got up to the 1525 price, similar highs to right in here, roll over, and then it didn't actually continue rolling over. It didn't come right back down to 1514. It paused here on this candle, it bounced, came all the way back up to 1530 on the dot, 1530. And, all day we've been talking about being bearish. Here would have been a great bullish move off of known support. It wouldn't have worked here, but you would have been waiting to go bullish above these candles. In this case, you could have been going bullish above these candles. Hopefully not with a stop way down here, because that would have been just, maybe a 1.5 to 1 risk reward, or reward to risk on this move. But on this candle, if you had thought, all right, this is a good bounce, here, I'm going to get into that, and ride that up. You could have gotten in on that candle, or could have gotten in on this price level with a stop, below down here or something. It would have been 2 to 1, or at least a 1 to 1, something like that. Now we're doing it again. We've got a high wave candle, much lower volume. We did have the squeeze form on a couple of these candles and move bullish. And now we're right around a previous support that broke. So now it's a new resistance. It did push through, but it actually just turned into an evening star reversal and broke down again. So this would have won once this candle forms. Okay, that's a bullish engulfing on this candle. And we're bullish. I'm sorry, I keep saying the wrong word. We're bearish again. A bearish engulfing candle of this candle, and we're bearish again off of this level. This would have been the place, or at least on this candle would have been the place to get into some 15-15 puts, 15-10 puts. We did come down there, and it's 1 o'clock in the afternoon on expiration Friday, and the volatility was going nuts. I was not watching at this point, but just there was a few. I think I got back and I was looking at the computer around this time and seeing, wow, this is really a great consolidation, just like this one, even tighter. It's expiration Friday. This could bounce, off of the previous level here, or it could just break down, and it breaks down in a hurry, and then continues to break down. We get down to the 1,500 price, just pennies away from 1,500. I mean, you would have been getting out there had it gotten down there. This is one of those things that, on this kind of consolidation, we're bearish from here. This one, a great place to move your stop, move your stop, breaks down, move your stop. It breaks down so fast. Anybody who's buying here, anybody who bought here, now they're trapped. They're stopped out. The only support that's left is this level or this level. You take those out pretty quickly. Now we're getting into the last hour of the day, and there's some more volatility comes in. It bounced back up to 15-14 and then rolled over again, and this time it's like, okay, we haven't been holding these supports. Is 1,500 going to hold? And in the last, let's see, what time is it now? In the last 15 minutes of the day, we broke that one too. And so all these lines that we've had, we drew days back, you zoom out and you're like, oh, look, we just bounced between it, broke down, bounced between it, rolled over, bounced between them, rolled over. It just, zooming out, you can see this so much better than going candle by candle. But in general, you had a retest of the high and a rollover, a retest of the previous support and a rollover, a retest of the previous support and roll over. And that's what it did all day. The biggest problem that I had was the options were very spready. So here is a call to 1525. Here's the puts at 1500. This does not do the options justice for what the range. I mean, this was probably, let's see, in the low. Yeah. Let's see, 118.70. The range on these was much. The spread between the bid and ask was much larger than what this shows. If we take a look at maybe the 15-15, probably the high and the low were pretty much the range on some of these. So you had very much like $1 range on the bid and ask, and during the times that I was able to watch things, I should have just gotten into something and at a good support, good resistance, whatever. Well, good resistance on a put. Or just gotten into some of these as an absolute zero where you risk, just, your 1R, and, that would have been happening here on this retest right at 1 o'clock. So that was this one here that it was then rolling over and just rolled over all day. So at this price, when it got up here, it would have been possible to get into a put for about $1 or $1.50, and that would have gone up to a high of 1960. Let's say you bought it for $1.50 and you got out at 15. That would have been 10 times. You would have made 10 times what you risked, or 9-hour gain on that kind of a move. And that's what you expect to see on expiration Friday. It's just knowing what your risk is, knowing that it's going to move quickly. Your stop may get jumped, so you want to have some extra padding in there. That's why I prefer the absolute zero method, that you are going to just have your stop at 0 or trail up as soon as you can, and there was opportunities to do that in here, and it just continued on. So if we zoom out and looking at everything going on, oh, hang on, I got to turn that off. All right, timer turned off. Now we're zoomed back out. I've got, we'll come back to the 4 hour minute. Here's the move on the 5 minute we just went through, and we'll just look at the 1525 calls and the 1515 puts to see how this moved. And so this quick move down, bearish, would have been a great place to have bought at a put at the high, at the pre-market high we talked about, and just held on for a quick ride. Probably gotten out at the support at 1528, or hung on and gotten out anywhere here, or trailed out anywhere as it moved back up. This would have been really hard to trade through here. There was some choppiness on the calls as it bounced, but it would have been possible to get in on with a larger R than 100 on this option, just because of how it was moving. If we take a look maybe at the 1540, let's see how that one was moving. I like looking at these that have the lower. This was still pretty high. How about 1550? So 1550, yeah, it lost a lot of premium. Came down here, so this would have been a low just above $1. That would have bounced and maybe got out somewhere in here for $3. So maybe like a 1.5 to 1 if you were getting out at the right times. And then this move here, this is where it came back up and retested the candle that was on the high, the opening candle for the high of the day. If you had gotten out on this candle, that it's probably not going to break out here, even though this did look like a double bottom and then a pause and then continue. It was just so bearish that it just didn't last. And that was the other thing, is we broke below this double bottom pattern. This is the right side of that low. We broke below that here. We definitely didn't bounce again, with this consolidation. And so your calls were just losing value all day long. And that's why I wanted to look at something that stayed a little closer and had the potential to see something happen later. So this one, you could have bought for $50 right here, or back in here as this was bouncing. This was that low that I got down to 1509. Could have easily bought there, probably for maybe $40, $50, something like that. And then as it ran up, you would have doubled that option, given another opportunity to get in, and then came back up to $1.50 or $1.50. So that would have been, it would have been a 2R gain on that if you had gotten out right in here, knowing that we were so bearish today and everything else in the market was so bearish. This was not the move to continue to ride. This was the place to get out. So maybe you didn't, maybe you just made an R on this little bit in the move. If you were a little bit closer, so if we go look at 1525 again on the call, it moved a little better. And I actually looked at this one and just, it was so spready. I think I saw it, and this was, oops. So on this, is it this one? Where's the, no, I think it was this, on this candle, I think I saw it. And yeah, so that spread there, the height of the low, 276 down to 145, that was like the bid and ask. It was like that. It was so wide. It's like, I'm going to get stopped out. I don't have $100 here that I can risk and know that, okay, it can move a little bit against me and I'll be okay. But I should have just been buying off that low. And that low, I could have bought for maybe $1.50, maybe $2, and thinking that it's got to retest. I can't just do this. But you trade according to your rules, and I thought it would hold this. I didn't expect it to break and then go. It's kind of similar to this, how this broke and then returned, and this one broke and then returned rather quickly. This would have been a great move here in the option. Had I bought at 2, I could have flipped it out at 5 or 6 possibly, and that would have been a 3 or 4 R trade, within a matter of 5, 10, 15, 20, 25 minutes. Moving a stop up or just getting out after 2R, I mean, that would have been 10, 15 minutes to make that. And so it's sometimes that simple. And then with this candle here, this one, it came back down so quickly. This one you could have gotten in at 3, and it just continued to move in your favor, and you could have gotten out at even 7 or 6. That would have been another 3 or 4 hour trade very quickly, in just a matter of 10 minutes on these, because these bullish moves were against the trend on the day. So then we're up here, we're looking at that bearish engulfing, and we're right here on the 15-15 put. And so this would have been something that either you just got in knowing you're going to risk your R, and that entire value, and it just moved in your favor the whole rest of the day. Or maybe you, let's see, let's look at the 25, and you're down here, you're waiting for it to actually roll over, and you get in on this candle here. So maybe the worst case is you get in on that high. That high is 610, and so your stop is going to be below this candle down at a little under 3. So I mean, that's a $300, $400 risk probably on that trade, and you could have just ridden that the rest of the day. I mean, up to the high here, when it touched the 1500, you would have been tagging the price that was, or the strike that would be $25 in the money. So with being such a late time in the day, you've got mostly intrinsic value. It came up to almost $25 in that option, and if you had bought it, I think it was 6 or something. I think it was 6. We said here, yeah, but 610, 6. With the stop down a little below 3, maybe at 2, $6 up to $25, that's a $19 or $1,900 gain on a 400 risk. That's more than a 4-to-1. Maybe you didn't quite get those values, but still pretty close to a 4-to-1 risk. If we come back to, I don't like when it does that. Need that one. There we go. Oh, I'm looking at the call. There we go. Back to the put. And now back here, had you gotten in with just absolute zero, or even gotten in at $1, $1.50, something like that, maybe when it consolidated, you would have been tightening up your stop and maybe gotten stopped out if you got too tight, or if you, just kept a little further back. And yeah, probably, if you had even tightened it up to $2, you would have locked in an R. Had you not been stopped out because of the spread and held, I mean, after the consolidation, 5, 10, 15, 20 minutes later on this candle, you would have been up, almost 10R in the day. And then it actually got even further than that when it got to this point of breaking. Had you waited to the last 10 minutes of the day? That's the other thing. It's like, would you have actually waited to the last 10 minutes to lock in that profit, or maybe we would have gotten out at some point. This is when it's nice to have a larger R than 100, where you can throw a couple more at it. Had you gotten the 1500 put, this had some incredible moves here. You could have gotten in at $1, flipped it out at 4, gotten in for less than $1, flipped it out for maybe a little bit of a gain, maybe half an hour. Done it again here. Every time it came under $1, if you just bought it, would have been able to flip it out when it consolidated. Flipped it out for 3. Came way down here. I mean, hopefully you weren't getting in. Where is it? Here at the $1, looking for it. Maybe you would have said, okay, that's it, I'm going to get out, and this just went sideways. And then when you put in this consolidation, even though you'd already had this bearish move, it consolidated. This would have been a place to be like, hey, I'm going to load up. The low here was $40, so you could have gotten 2 of them, and within a matter of a couple bars, you were up at almost 5 here. Yeah, right at 5. So this would have been a few R on that move, and then it came back down again under $1. And when it came back up to the 15-14 price, and then dropped immediately. And so this could have been something you took. Let's see. So we had some value coming out of it. So on this candle, almost the end of the day, you're not in the money yet. So the premium is just trying to get out of the option, and it's really volatile. Had you gotten in at $1 and a stop at 0, you would have just held through that, or you would have locked in something at 3 maybe. You may not have gotten in again on this candle, not knowing what was going to happen, and then just unsure if you can actually get out of the option, except for using a market order, and you may have gotten a bad fill on that on this candle. So had you bought again here, trying to flip it out somewhere in here, you could have gotten a really bad fill down here, because everyone else is just trying to get out of the options, especially if they're in if they don't want to be in the money, and it's looking like it was in the money into the close, just for some of the accounts that can't be bearish as the option closes or expires. So some phenomenal moves. The last part of the day, whenever you see the premiums coming out of these options, it's likely moving the other way. I mean, let's see what happened to the 10, the 1510, even the 1500 call. I mean, this was so choppy right into the close, and it's you're in the very end of the day, the last hour of the day, and you are you're a couple strikes away from being in the money. Normally on a calm day, these are the options that are down to 50 cents, nothing, or $50. Instead, you're still at $10 on this, or at 1,000 on this. You'd have to spend $1,000 to get that, and then it lost all of its value and ended way down at nothing. So we ended out of the money for the calls, but it still looks like it has premium in it. That's how volatile today was. So the any trade you took, you want to be in and out pretty quickly. You wanted to lock in the game when you got it because of the spread. And the last thing I just wanted to go over for today was taking a look at what happened on the 4-hour. We were talking yesterday about this this consolidation, this triangle that happened, and I think there's actually 2 triangles here, and I'm not really sure why. It's just a function I have turned on. It shows up triangle in red right up here when I hover over it, and it's just one of the analysis tools. So it worked a number of times before. It worked on multiple triangles through here, and actually led to a false breakdown on the main one, but this one here actually suggested, well, it still held it in here, right back into it with this, and then a breakout bullish, and so I hover over it, you can see some of the green ranges on these, and only thought the stock was going to move up to here, and it did, and paused, and then it just rallied on. This one looks really bizarre. It was only a single line, and it just was really irregular shaped. These symmetric ones are the ones I love to see play out all the way into the tip almost, and that's what we got here. Is we had a pretty tight. I mean, we're still talking 40 points, but with the move we've had, this kind of pattern here, well, what happened was on this triangle we actually broke down pre-market down to 15-14, retested that bottom edge, and so it's harder to see on the hourly. I don't have it drawn in here, but follow this line along. This was the breakdown. We broke down to 15-14, retested, and then started to roll over, retested again, or put in a double top. And now I'm trying to point to this. So this would have been your breakdown, retest with a double top, roll over, retest to that neckline of the double top, roll over. My anticipation is this going to continue to roll over because of the size of this 4-hour triangle. And the size, there were multiple here, a much longer consolidation, much tighter range. This one still has the momentum to pull down. Definitely, I'm not going to guarantee it, especially on a YouTube video, but 1468 could easily be a target. Previous all-time high range in here, previous support easily could come down in here, could still break even lower, and I'll have to take a look at this some more to see what else we could come down to. 14, let's zoom in a little bit. 1435 maybe. I don't anticipate it coming down into the 1275, but if it does, that would be a great place to buy. The very old all-time high, 1320, that was where we touched on here. The low on this candle being about 1320. That's a possibility. There isn't. There's a lot of candles in here that are really large, which means there may not be as many pivot points to slow down in here. So if Monday it opens a little bit lower and then bounces, sorry for more beeping. If it opens a little lower, bounces at this level, look for a move back up into the 1500, maybe into 1514, 1528, and then another rollover could be possible. That would be yet another bigger rollover to take it down further. And then in this kind of picture, this could start to look like a shoulder, a head or double head, another shoulder forming. If it does that, we'll have to just wait and see if we're going to hold this level. The other thing that this looks like, I think I said yesterday, is a double top. This would be the neckline. So your neckline is kind of these candles, either the 1528 or the 1540 price area here. Somewhere in there is your neckline, and we're definitely below that. If we have any consolidation in here, it could be a wide range, $10, $15, $20 range of consolidation in here, and then a break bearish. That's another great place to get going on the bearish move. We come back to the hourly here. We've got some very strong bearish momentum. That's the strongest we've seen in a while. Come back to the hourly. Let's see any of these moves. The strongest bearish we got was actually in these moves on the momentum, and we're contending with that. We continued with it here, and we're very much steeper here, similar to this one. And so it's possible that we'll have, a strong wick down on an hourly or 4 hour, come back up like this did, and then consolidate and roll over larger like this one did, just because the steepness of the momentum coming out of a bearish move, bearish pullback here. So just continue to look back at what's happened before. You had the squeeze on this one. We don't have a squeeze now. But because of this larger triangle and a retest that rolled over, it's very possible to continue moving bearish. If there's any bullish moves in here, I would look for it to bounce off of like the 1468, and then you could have some quick moves back up into these resistances, and then wait for consolidation to break bullish. With the general market looking a lot more bearish, this being a lower high, and obviously this kind of move on the daily is unsustainable. So we have on the daily a lower high to this one. We've been very bearish, 5 bearish candles in a row. We got 3 in a row here. 3 in a row is the most we had, I guess technically 4 on these recently. So 5 and then another set of 3. It's possible to have a larger pullback. That's all I'm trying to say. And there's still some possibility for some bouncing in here. If we get below, say, this pivot, get below it, retest, and then actually rally, you'll trap a lot of people that were buying puts or going bearish below that level. So that's the next thing I would anticipate people being trapped, is in the lower 1400s, looking for it to continue bearish. And it ends up going bullish larger. So we'll check things out Monday. We'll see what happens after the weekend, and we'll just continue to look at Amazon here. This was Justin Amazon. Thanks.